Good morning all and welcome to another one of my videos. I have just the one pair on watch today, that is euro dollar. I have taken the other pairs off watch and I don't have anything else on watch but euro dollar today because according to the structure as I've learned to see it, it looks like we're forming some slightly deeper structures, not necessarily massive ones, but it looks like the structures that are forming at the moment across my top 6 pairs and my one wild card that I have in my top 6 and wildcards list this week. It looks like they're forming some slightly deeper structures, so we're just going to let them do their thing. There's no need to jump into things which just don't look ready according to my experience and opinion. So let's draw. Let's talk about euro dollar. Let's analyze this as I see it. I've had this on watch for a little while, so those of you who've been watching my videos regularly will know why I'm looking at this. But I'm going to tell you why I'm looking at it, and I'm going to just touch on the DXY because I think that's important in this instance. Because I've just evolved my forecast on this pair ever so slightly, and why I've done so will become clear once we get down to the lower time frames. So on the weekly chart, we have a very clear 1, 2, 3 touch structure, which taps into the last line in the last line in the sand. That's easy for me to say. The last place where there was an exchange of liquidity that I can actually see when I zoom left. Okay, it's very, very important when you're trading to zoom left. This is the last exchange of liquidity that is visible to me, so it's no surprise why a piece of structure would line up there, because it's a good area for an exchange of liquidity once we come back down to that area to occur. 1, 2, 3, we tap into that. We've got this kind of middle section here with this 1, 2 middle section, a piece of structure within this structure. So the patterns that we look for are fractal, as to quote a word that Mark Douglas uses in Trading in the Zone. We have a 1, 2, 3 within this 1, 2, 3. So it's no surprise to me that price reversed in that area, because that is a typical example of what we see, those of us who trade the Falcon strategy. So when I see that, I'm naturally thinking to myself, okay, well, this is potentially an impulse correction continuation to go long. Okay. But when I see an ascending structure like this, where there are a series of near misses. Now, what do I mean by that? Well, when we have a low which comes close to a previous low, it doesn't quite tag it, and then we have another low which comes close to that low and doesn't quite tag that. That gives me a clue that there is likely, each time we miss it, there is likely liquidity still sat at the low which was not tapped into, if that makes sense. Okay. And in the same way that on the upside, when we have an exchange of liquidity here and we get close to it by way of this high here and we don't quite tag it, we do take out this one, but we get close to this one again by way of this touch here, and we don't quite tag it. That gives me a clue that there's still liquidity here, which needs to be tapped into before the bigger move down to the downside to take out these near misses, as we call them. So that gives me a clue that I could potentially capitalize on a move to the downside down to here before that longer term move to the upside. And you can see we did tap into this area and we pushed down aggressively. So the next thing I ask myself is, am I well positioned? And I can see, even without dropping down, that we're below this trend line. We've had some serious momentum, which was likely caused by the big players, and that it's quite clear to me that we're headed down to take out these lows. Not concerned about this one so much, although because we have kind of near missed that, we haven't tagged that area yet. It's quite clear to me that we will at least take out this low. As I say, not concerned about that much, but because we haven't tapped into it, it's more likely that price will move down, as opposed to if we did, where there may be some profit taking in this area, and we may see price consolidate sideways for some time. The next thing I ask myself is, am I well? What is the sequence like? Okay, so this is a corrective wave, which does add fuel to the theory that longer term we may see that move to the upside. Okay, so when the move down is corrective, we have a corrective wave that also adds fuel to the what I was saying earlier about us responding from this area for that potential move to the upside. And if we just measure this with a Fibonacci, we don't trade Fibonacci levels, but I just use this as a rough guide. If we were to react from this area and go long, in terms of this potential impulse correction continuation, this correction would be about a 45% retrace before the move of this initial impulse, which would be a healthy correction for price to actually go long. So that makes sense as well. So as I drill down, you can see we're getting some momentum coming in, but as I drill down, it will become clear why I'm looking for what I'm looking for. So we have the impulse down, tighter correction, larger correction, smaller correction, larger correction, tighter correction. This is a typical example of what we see. Okay, and the reason that we have these tighter corrections typically coming out of larger corrections is because the volume has already been built up in the larger correction, so therefore price doesn't tend to need to correct for as long once it breaks out of them as it would do if there wasn't a larger correction preceding them, if that makes sense. Okay, so this is just me pattern separating, trying to separate the structures, trying to make sense of what price is actually, where one structure ends and another one begins. Now, I'm not convinced by this. Okay, so we have this structure here, and previously you may notice I was looking at this as my area of value. Now, if we just look at this, let's just analyze this. We could well push down from here, but we've tapped into this once. Price didn't find enough liquidity to move it to the downside. We tap into it again. Price didn't find enough liquidity to push it to the downside. We then come down. We kind of break this low, or we tap just below it. Price wicks all the way up. It pushes down. But again, look how it comes back up. It comes up in the form of a sharp move, giving me a clue that this sharp move is likely orders just been placed up in this area again. Remember yesterday I said that if we just look at this structure, as I said, we don't know what's going to happen as traders. I'm not a fortune teller, but we have this. When we had this 1, 2, 3 here, I said to you that I was including this wick here as part of the structure because typically speaking, the structures are parallel. So that gave me a clue that this is potentially part of the structure. However, when we get kind of this anomaly wick, which is not really part of anything, right? And if we just look at it on the 4-hour chart, on the 4-hour chart, it's just a wick that's not really part of the structure. On the 1-hour chart, it's just a wick, which is not part of any structure really. And on the 15-minute chart, it's a wick. And if we just drill to the line chart in all three instances, you can't see that wick on any time frame. Okay, that gives me a clue that that wick is just a volatility spike, right? So what I'm going to be looking for, given that this also happened during the early hours of the morning, which is not typically when euro dollar moves, what I'm going to be looking for today is that gives me a clue that this is not the area of value, which is why I don't have a blue line there with area of value written on it, which gives me a clue that the back end of this is the area of value. Okay, people believe that when support is broken, it now becomes resistance. So where would a lot of these people be getting short if they're trading support and resistance? They'd be getting short below here, and if they believe that this is now resistance, they would likely have their stop losses just above here. And if the big players know that, they will likely place their limit orders just above there. Okay, so we didn't really we tapped into it by way of a wick, but we didn't really. That gives me a clue that we're likely, if we do push up to there, like to break above it. And if we just drill down to the 15-minute, I've just spotted something. If we just tap, if you look at this little piece of structure there, we kind of only just literally just wicked to that as well. That may become significant. We shall see. But what I'll be looking for today is the following. I'll be looking for price to tap up, fill that wick. We often see these wicks filled. I'll be looking for price to fill that wick, push down, and then flag. And then I'll be looking to get short either within or on the break of the flag. And then I'll be able to manage it down to these lows for something in the region of about 4%. Obviously, it depends on the size of the flag. And one of the reasons that I'm looking for this is if I just take you to the DXY, for those of you who don't trade the Falcon strategy, you may not use the DXY. Okay, but the DXY, if you don't know, is the inverse of euro dollar. Okay, the DXY is a index of the dollar's strength against a mixed bag of other currencies, and primarily I think 57.14% of it, don't quote me on that, is the dollar's strength against the euro. Okay, so which is why when we look at the DXY, it looks very, very similar to euro dollar, but sometimes we can use this to help us determine the structure of dollar related pairs and in particular euro dollar. So let's do that now. Right. Now, if you look at this, you can see the similarity. If I just flip it upside down, you can see the similarity between this and euro dollar, hopefully. Okay, so we have that kind of 1 2 3, there we go, that taps into that liquidity there. This goes back a bit further, but you can see the same kind of thing, right? So if we just drill down to the lower time frames, if we look at this one, of course you could extend that sideways, but you can see we've tapped into the base of that. If I just zoom in, there's something quite specific. There is a little exchange of liquidity there on the 15-minute chart, which is kind of the last line in the sand as we broke out of this structure. Now, there's a sharp move. There's a sharp move down from there, giving me a clue that there was likely a lot of liquidity in that area, which caused that sell-off. And if you look at the structures here, I've just tried to separate them all. We've kind of gone into this structure, which hasn't quite tapped into that area, and we're falling correctively. And as you can see from my drawing, we appear at the moment to be forming this kind of 1 2 3 structure. Remember, I've talked about in my previous videos how the second touch often falls just shy of an area of liquidity, which means that, this is kind of the FOMO channel, as I call it. We have this corrective move down where people tried to sell. Obviously, this is upside down, this chart, but you get my point. Once we get these sharp moves up, and these sharp moves up are likely orders being placed in this area here, which need to be filled before price moves to the downside or the upside, because this is upside down. And then if that was to happen, we would have this 1 2 3, which moves. If I just flip this back up the right way, we'd have this 1 2 3, which taps into that area of liquidity before we see that move up. Now, if that was to happen, then the same thing would likely happen on the flip side on euro dollar, okay? Which is maybe why we're getting this kind of corrective move down. So that adds fuel to the theory, potentially, that especially when I look at what's happening across the board with the other dollar related pairs, this gives fuel to the theory. I mean, you could, if we just rein this in a little bit, okay, if we just assume that this is one structure of its own and that this is a separate piece of structure, and we just cut through these wicks, and that's and as we said, that's a volatility spike. This could potentially be the 1 2 3 to push down and give us that flag that I'm looking for. In this instance, I would not be looking for a risk entry from the top, because we've kind of gone from this correction into a correction. When we go from a correction into a correction, it becomes more risky to take these risk entries. So for that reason, to mitigate that, I will be looking for that, just that push up to that area, push down, and then the flag, and we'll see if that happens. Of course, as I've said, none of us know what's going to happen, regardless of what people tell you on various platforms. They know what's going to happen next. You would need to know what every other market participant is thinking and about to do, and you have to remember that many of them don't know what they're about to do until the moment that they actually do it. So trying to predict what everyone will do in the market is just a bit ridiculous, in my opinion. All we need to be able to predict as traders is what we do, and as long as we do that and we're trading from logic and not emotion, our decisions are logic based and trading plan based, then it's very hard for you to go wrong in this game. But that is what I'm going to be looking for today, folks. I have an alert set just below that ray line to see if we tap into that, and if we don't, then the next area that I would even consider an entry, because of how the structure is shaping up now, would be underneath all of this. So I've got an alert under there, and if this alert doesn't trigger today and price does something else, then I shall go and do other things, and that's how we need to be as traders. Find if something shapes up and find if it doesn't, and I shall leave you with that thought. Thanks very much for watching, folks. I will be back tomorrow, providing I have a pair on or pairs on watch, and we shall see how these other pairs that I have in my in my top 6 and my wildcards shape up over the next 24 hours. The structure may be a little bit more clear, but for now, have a great day, and I will speak to you again soon.